Boom! What's going on, Investomaniacs? Your boy Knight Rider here, and today we're going to be talking a little bit about CarMax and Carvana. Remember when your family needed a car when you were a kid? And you were driving around in your old car for hours with your grumpy dad, talking to the slick talking, salespeople with their hair all slicked over. Right. And then your mom, every time your dad's about to make an offer, the mom's like, I don't know about this one, honey. Maybe we should go look somewhere else. Not exactly the pleasant, consumer-friendly experience companies are known for today, and certainly not what we would define as high tech. There is a reason why used car salespeople are the most hated workers. It's the most hated profession in America. The second most hated profession in America being lawyer. I used to be a used car salesperson. My dad's a lawyer. What can I say? People just love us. Gone are the days of kicking tires and excessive haggling, kind of, depending upon where you go. Technology allows for car shopping to be done right from the comfort of your own home. Carvana and CarMax are two companies right at the forefront of the internet used auto showroom. With the ever-evolving business model of car shopping trending away from traditional dealerships, it's worth taking a look at some of these newer auto sales innovators. CarMax is the older of the two companies, originally formed as a subsidiary of Circuit City. Yeah, remember that place? You remember Circuit City? Remember CompUSA? Yeah, CompUSA. Those used to be like fun places to go to, and they don't exist anymore. Anyway, at least something from Circuit City worked out. The Auto Trader works on a hybrid business model. It has a website where consumers can search through thousands of their vehicles, and they have almost 200 physical locations. So a big old physical footprint, and customers can have wherever their preferred car is, they can have that shipped to their closest location, although obviously fees may apply, right? I mean, they have some cars that are thousands of miles away. Additionally, CarMax kind of helped revolutionize car sales in a few different ways. For example, they were the first major chain to be no haggle, right? We all hate the haggling, man. They were like, no haggle. The price is the price. A little bit more modern. They also offered a free return policy, a 5-day return policy, which is extremely uncommon even today in the car sales space. They also, for your trade-in, or if you just wanted to sell a car to CarMax, they would give you a written quote good for 7 days. Also very rare and uncommon in the car business, where like nobody will give you a written quote. And since I used to be a car salesperson, I know that CarMax is known for not hiring car salespeople. If you have car sales experience, it's kind of difficult to actually get hired at CarMax because they don't want car salespeople. They explicitly want people who are more customer service oriented, and those are not the same types of people who make good traditional car salespeople, right? Their pay structure is also different than most car dealerships. Most car dealerships, their pay structures are very heavily weighted towards performance and gross, meaning like how much you make on the cars, and that's not the case for CarMax. It's a little bit more kind of like hourly based. There's still some performance-based stuff in there, but it's a lot more just like you get X per hour regardless of how many cars you sell, at least on a relative basis. It's more kind of customer service oriented in terms of its pay structure. And the dress code that they have for their salespeople, it's very non-intimidating. They're just wearing like khakis and a polo shirt, and it's not like that kind of, again, they're not wearing suits, they're not wearing dress shirts, and it's more friendly for more non-intimidating, right? And these changes in aggregate, in addition to just having fantastic management, has led to a significant improvement over the traditional used or new car buying experience. But CarMax, and by the way, they're already the largest seller of used cars in America, but they're still going further and they're continuing to push the boundaries of kind of being on the technological edge and just on the edge of having a consumer-centric sales process by actually doing direct to your front door delivery of the car, and then you can sign all the paperwork. They have like a kind of like a CarMax van that comes around where you can sign the paperwork. And so just think about how much time and convenience that will save the customer, not having to physically go places and deal with car salespeople, although they're much friendlier at CarMax, and having to deal with being there for hours. But again, CarMax is known for having a very short turnaround time relative to normal car dealerships. But it's not a pleasant process most of the time, and it's so much more convenient to have somebody come to you, and that's what they're testing out. And this is the page on how it works for them. The company is poised to open at least 14 more brick and mortar used car lots in the next year, a revamped website that is seeing 15% more traffic than the prior version of the website, and the kind of possibility of the growing direct-to-door car shopping experience. For these reasons, I like CarMax. I think they're going to continue to do a great job. They are, in my opinion, by far the best operator in this space, and in many ways I like used cars more than I like new cars. There's a lot more what we would call gross in the car biz in used cars relative to new cars, and CarMax vehicles certainly demand a premium. They are some of the most expensive used cars on the market, but people are willing to pay more to work with a company who is reputable and they can trust and is very friendly and convenient. Now let's go ahead and talk about Carvana. So anyway, I would recommend CarMax here if you're looking for a kind of a value play. They're still growing a little bit, but growth is pretty slow. It's around like 6% or somewhere there from the top line. So obviously I wouldn't call it a growth company, but they still have a little bit of growth to them. But I'd say it's more on the value side, but I do like CarMax. Now let's talk Carvana, which is kind of a bit of a baby relative to CarMax. Founded in 2012, but it is the fastest growing car sales business in America, and it has the unique kind of distinction / gimmick which sets it apart from all the other car dealerships, and that's what you're staring at right now. It's the vending machines. We've all heard about them. You may have seen them. They are strategically placed next to high visibility areas, generally right off of a freeway, many stories high, which allow for excellent visibility and serve as a permanent and quite awesome advertising play. This is my local Carvana vending machine here in Orlando. This isn't some promotional picture. This is just straight off Google Maps, right? Straight off Google Maps. Tell me, this is not like super, like that's just the best billboard you could possibly ever ask for. It's so clear, and every time I drive by it, which isn't often because I don't go that way, but I'm just saying it's a really, I know that road. It's a dense freeway. I'm sure it's tens or hundreds of thousands every day people going past that on the freeway, and it's so incredibly visible. And I say novelty sells. A lot of people think, oh, it's like a horrible spent of money and they shouldn't be spending the money on this and blah, 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 blah. But it is these little car vending machines, which granted, they cost a whole bunch of money, and I can't exactly say like the ROI is good on them, but novelty sells. It's what gets the Carvana brand name inside people's heads. It's not just enough to peddle cars on the internet. You gotta have something, or it helps to have something which keeps your brand name in the customer's mind. And these darn things are so unique, they are definitely head turners. I remember the first couple times I saw them and I'm like, what is that thing? Carvana has 18 of these vending machines across the United States, and they have as soon as next day delivery service, depending upon where you are, in nearly 140 additional markets. The recent acquisition of auto scanning and photography company Car360 means every car in their inventory comes with a 360-degree interior and exterior photos. They're fantastic photos. I mean, play around with the website if you haven't. The photo quality on these is amazing, and you need to have that, right? You have to have really high quality, detailed photos of all parts of the car if you're going to feel comfortable buying a used car without ever having seen it in real life. But they're really doing a fantastic job with this. Also, every car comes with a 7-day grace period. So, hey, you can love it or you can leave it, just like CarMax, right? You have a return policy. By the way, Car360, that was a company that was developed by the dude who pitched cycloramic on Shark Tank. I don't know if you guys remember that. It was like this 360-degree camera app that was made for the iPhone 5, and you can put it on something and it will spin on its own with its little vibrator. Mark Cuban invested in that company. The technology was then repurposed and sold to Carvana for $22 million. So yeah, pretty awesome. Now, I like the Carvana business. They are growing the top line like a weed. How many $10 billion market cap companies are growing revenues at over 100% annually? I don't know the answer to that question, but I know it's not a lot, right? What's more impressive is this isn't it's not like some software as a service company, or it's not something that's just franchising out a bunch of a bunch of other people so they can do the CapEx. I mean, these guys are selling used cars. That's an old school way to make money. It's like real estate, right? It's a very difficult product to scale because they're used. Anything that's used is a difficult thing to scale. That's part of what I love about Etsy so much. They figured out a way to scale the unscalable. And that's why I like Etsy, right? Because it's where else can you have scale in things that don't scale? To an extent, eBay's kind of also like that, because they're not doing it themselves, they're kind of outsourcing it. So they're enabling the scale of things which can't really be scaled. The company, I think, is doing quite well, and yet I personally can't get behind the stock at this point for one single reason: dilution. There is so much dilution occurring in this stock, and there's so much additional dilution which can occur down the line. I just don't feel comfortable. I feel that the amount of dilution outweighs the positive factors of this company. So we've been public for about 2 years now. This was Q1 of 2017, and there were 15 million shares. 2 years later, we're in Q1 of 2019, and we're now up to about 44 million shares. So I want to do a little bit of math for you. So in Q1 2017, they brought in $159.1 million in revenue, and they had 15 million shares. I'm sorry, this is Q2. This is supposed to be Q1 2019. In Q1 2019, they brought in $755.2 million of revenue at 44 million shares. So this is now, if we adjust for share dilution, so we're taking this number, dividing it by 15, and then multiplying it by 44, and that gives us this. So if we adjust for dilution, we're actually earning $466.7 million of revenue, equivalent on a Q1 2017 basis. So we're really on a dilution adjusted basis. The top line is only growing from 466.7 to 755.2. That's over a 2-year period. That's only a 27% annual top line growth after you adjust for dilution. Now, that's our Class A, where we are right now at 44 million shares, Class A, but there are over 100 million Class B shares left that can be converted into Class A. So that would more than triple your share count. So we've already experienced almost a triple in share dilution in 2 years, and we could experience another triple in share dilution. I mean, that's just, I can't, the numbers don't make sense for me personally, even though I kind of like them, but it's 27 top line growth. I'm not going to pay. There are profitable companies where you can get better than 27% top line growth that aren't diluting their shares. And they're going to be free cash flow positive, operating margin positive, right? As opposed to Carvana, we're at negative 27.9% in free cash flow relative to revenue. Our operating margins are at minus 10.5%. These are, I mean, you're losing a lot of money here. This company is eating up a lot of money. Now, I think they're doing well. I think they're executing well, but we have to be hard when we are investing and say, okay, yes, the company is doing well, but is it doing the best? Is this the best place to put our money? Now, having said that, if you want to be invested in the auto space, then this is your clear beta play, right? If you're looking for growth and this is the space you want to be invested in, probably Carvana and Car Gurus, those are going to be your two beta plays, right? If you're looking for high growth and you want to be in this space, you can't be invested in AutoNation or CarMax. There's not enough growth left in those kind of larger type companies. So I'm not necessarily saying you can't invest in it, but personally, I think there are better options available out there for your investing dollars because they're losing so much money right now. So anyways, guys, I hope you have a great day. I appreciate the likes, comments, and subscribes. Thanks.